Delticom is Europe's #1 online tire dealer. Over the last 12 months across the 35 countries we are operating in, we were able to attract around 750,000 new customers, a couple of 100,000 recurring customers who shopped in our, I think, a little bit more than 100 shops, 102 shops we have right now. What the customers like is, first of all, the choice. If you're looking for a particular tire, any tire, you'll probably find it in our shops. It's an unmatched breadth and depth of offering when it comes to that. We are definitely the biggest tire dealer in the world. Each and every brand, be it big, small, fast, slow, premium, budget, will probably have it. Of course, it's not only the choice we offer, it's of course also the price. Prices are for car tires approximately 20–25% lower than you'll get at your typical high street dealer around the corner. Comparing with those high street dealers, there's probably one thing those first-time online tire buyers have difficulties to wrap their head around, and this holds true even for experienced online shoppers. How do those tires, and this puts us a little bit apart from the Amazons, how do those tires actually get to my car? Well, we have 3 ways of delivery. First, we can send them to your home address. You just throw them in the trunk of your car. They're not that heavy, those tires. Drive to your car dealer or whatever garage next door and let them fit it. Or second, you just give us an address, we send it directly there. Or if you don't have a preferred garage, you can select from, in the UK, next to a little bit small number, 1,749, this is of last year, more than 20,000 service partners all over the world. It's a very good add-on service. Add to those services other parts of service. One of the speakers already mentioned it. It's also country-specific payment, which is very important. It's not only offering credit card, it's also paying by invoice in Switzerland or Lastschrift in Germany or Carte Bleue in France or Laser in Ireland or wherever. It's also having multilingual support in the hotlines. And although it's a very commoditized good, I mean a 195/6515T is a 195/6515T everywhere. Still you have, like for example in Sweden, spiked tires. So it's like with every e-tailer, it's about price, it's choice, it's service, and it's depth of information we offer. Some words about our history. Company's 10 years old, founded by Rainer Binder and Andreas Prüfer, 2 former Continental managers, still fully committed to the business after the IPO in 2006. By the way, Marco played an important part in that. They're still owning more than 50% of the shares, and company did their first online sales, B2C, in Germany, of course coming from Germany, but then very quickly advancing to German-speaking countries, to the Netherlands, to Scandinavia, France especially first, then Scandinavia, UK, southern part of Europe, later then Eastern Europe, and since 2007 in the US as well. Company has always been profitable, growing healthily revenues, both revenues and earnings. 2008 was a record year, growing top line +20, earnings +30, EBIT 30, earnings 40%. Looks like 2009 is going to be again quite a good year. Consensus among the 9 broker banks put us at approximately a little bit more than 290 million euros this year, and 122 EPS. So market cap, we're listed on the Frankfurt Stock Exchange, and part of the SDAX is approximately 280 million. A little bit expanding on the business model. It is your regular e-tailer. I mean, it is a little bit odd in this environment because we are pushing physical goods, but the tire distribution chain is odd in itself. The tire is a very mature product. It's been around for ages. So it is quite peculiar. You have all those big manufacturers, European and non-European manufacturers, and they produce all around the year. Because it's a capacity play, they have their presses running all around the year. And they produce all over the world because they're pushing their production facilities to where they wages are lowest, usually. So you have the necessity of having a big tire distribution chain, a long tire distribution chain, meaning bridging space and time. But because it's not really rocket science to buy and sell tires, everyone kind of does it. And the farther you go, the farther downstream you get, the more fragmented the market gets. I think the biggest tire dealers, car tire dealers in Europe, probably do not command more than 4% of the market share. This is bad news for the manufacturers because the tire is such a mature product. It's not only about volume, it's also about price. So the advent of Delticom being by far the biggest online tire dealer today, we're probably 10, 15 times bigger than our next biggest online competitor. 3/4 of all tires sold online in Europe are sold by us. Is in a way, it was first quite difficult to really engage with those manufacturers. But today, we buy from all of them directly, and this is the redesign on the right side. We buy directly, we stock the goods in our own centrally located warehouses in Germany and sell from there. This stock and ship method accounts for, I'd say, 2/3 of the tires we sell, and one additional third comes from hundreds of wholesalers all over the world, which were bound into real time with their inventory levels, with their prices, into our back-end system, which then gives our consumers, our customers, such a breadth of product ranges. To put this into perspective, just some market figures. Europe is 10 billion, North America is 10 billion, Asia is 10 billion. Those are the three biggest markets. Germany, of course, the biggest one in Europe, the most cars. Take a look at the upper right chart. It gives you an indication. This starts from 98. The growth rates are very unexciting but stable growing business. But then in 2007, bam, 8, bam, bam, 2009 again, the market has been hit very hard. In 2007, it was a specific German phenomenon. 2008, 2009, driven by recession, also very bad times for the online, for the tire trade in itself. It is entirely true that we are not fully unaffected, totally unaffected by those things, but we are, of course, being e-commerce driven by the increased internet penetration. More and more car drivers are on the internet and more buy their tires there. A very quick test. Who owns a car? Okay, that was an easy one. Who has ever bought tires on the internet? Okay, this is very true for each and every country. On the lower right side, you see that only 4.9%, this is a poll from the ADAC last year, 4.9% in the country where we started and where ADAC is a premium partner of us, only 4.9% have ever bought their last set of tires over the internet. But already, this is a very meager percentage, but take a look at the 18 to 39 age cohort, it's already 8.9, and ask if you can consider buying online in the future. 15% of all and 25, even more than 25% of the younger ones say yes. So this is the trend which is growing, which is the trend which drives our business, and this is reflected in the figures. This is a very many figures. It shows the P&L. All line items from the P&L, also the sub-line items from the other operating expenses, meant to indicate in a kind of contribution margin fashion, coming from gross margin, subtracting direct cost, subtracting indirect cost to arrive at EBIT. You see, this is a very low. The depreciation is very low capital intensity. It's only 80 people in Hanover. Where we operate. I've put out the slide to highlight certain things. First of all, just reiterate, we have centrally located warehouses. So that's the reason why in percent, this is the red 0.1%, the the margin in percent of revenues increased slightly because we added capacity. But now the transportation for a company as international as we are is really a challenge. Having centrally located warehouses, and it's needed because we have to have the scale economies. We still, because we grow into the periphery of Europe, we have to conquer the challenge that the relations getting longer and longer. So transportation cost, although the transportation cost per packet did not increase, the average transportation cost increased. Fraud is also an international thing to varying degrees, of course. Very quickly, to sum it up, it showing that so low it is. I mean, it has just been 0.7% of revenues this year. This is for e-commerce, for a business-to-consumer e-commerce business, quite low. Tires is an interesting product for e-commerce. Maybe not on the first side, but on the second and third. It is a very high-value product in a way that it generates high shopping baskets. It is a commoditized product. It's totally unemotional. I mean, nobody really cares about tires that much, or buying tires. So we don't have to engage into brand building. We let those guys who spend ages and tons of money into brand equity, like a Michelin, those are household names, Michelin, Bridgestone, Pirelli, Conti, their brands speak for themselves. We don't push the On des Trois Pneus, My Tires, Reifen Direct, or whatever kind of our 100 shops are named. We don't push it into the face of the customer. And of course, we have additional advantages. It's first and foremost our scale. We are just, as being the biggest and already one of the biggest tire dealers in Europe, able to get good purchasing prices and also purchasing payment terms. But also being international did help us so far, because we have such a good mix between countries where we fare good, other countries we fare worse. We have kind of seasonalities also in the tire business. So this mix, this portfolio effect really helped us. And also because the countries are on different points of the recession timeline, we were able to extract valuable information from customers trading down in Italy, in Spain, in Sweden, and use it now for adjusting to this very important trend which will impact all retail in the next couple of years. Focus on really adopting our fulfillment processes to that. And as we get bigger, we get more and more scale effects into it. Just very quickly, personnel expense and rents and overheads together, less than 3% with us. Take a typical outlet-driven offline store, it's like 40 to 50% of revenues going into those cost positions. And we split the cost advantage between the customers, getting better prices. And although it's a low-margin product, we split the cost advantages with our shareholders, getting a higher dividend. And that's the last slide, just indicating how we were able to grow the business. This is trailing 12 months cash, starting at 30 million in September 2008, ending at basically flat. So we were able to grow the business by more than 20%, grow earnings by approximately 40%, increase inventories quite heavily, pay out a dividend of 11.8 million, and still end at the same point. So this shows that we have a rock-solid balance sheet. The company is debt-free, intends to stay that way, unleveraged, at least for a while, because it's a very good indicator for those we do business with our partners, and especially also with our customers. Thank you very much.